Sunday Strategy Digest, the month in review. Updated, June 2026. This month's strategy dashboard shows continued progress since launch in October 2022. Net asset value return now stands at plus 96.2%. Annual growth rate has moved to plus 28.2%. Maximum drawdown remains contained at approximately minus 11.0%, and the rolling Sharpe ratio has recovered strongly to around 4.6. This update is not about predicting the next market move. It is about reviewing whether the strategy continues to behave as designed: systematic growth, controlled drawdowns, disciplined execution, and rules-based rotation. Since October 2022, the strategy has delivered an annual growth rate of plus 28.2%, a net asset value return of plus 96.2%, a maximum drawdown of approximately minus 11.0%, and a rolling Sharpe ratio of approximately 4.6. The main takeaway is that the return profile has continued to strengthen while the historical drawdown range has remained broadly stable. Performance is useful only when viewed alongside the risk taken to generate it. The equity curve continues to show a constructive long-term trend. There have been pauses, pullbacks, and sharp changes in market leadership along the way, but the broader direction remains positive. The strongest phase of growth has developed through 2025 and into 2026, helped by systematic exposure to areas of sustained relative strength. This is not the result of a single discretionary call. The strategy is designed to keep capital moving towards stronger opportunities while reducing exposure where momentum or structure weakens. The maximum drawdown shown in the updated dashboard is approximately minus 11.0%. That level of drawdown is meaningful, but it remains controlled in the context of an equity strategy. More importantly, the portfolio has recovered from weaker periods without abandoning its process. The aim is not to avoid volatility altogether. The aim is to ensure that volatility remains tolerable, losses remain recoverable, and the strategy can continue compounding after difficult periods. The rolling Sharpe ratio is now around 4.6, reflecting a strong recovery in risk-adjusted performance. A strong return is useful. A strong return with controlled volatility is more important. That remains one of the most important parts of the dashboard to monitor. Turning to the Nasdaq 100 market context, the environment remains constructive but uneven. AI infrastructure, semiconductors, memory, cybersecurity, cloud software, and enterprise technology remain the major leadership themes. At the same time, the market has become more sensitive to valuation, earnings guidance, interest rate expectations, and signs that AI-related capital spending may be running ahead of near-term revenue visibility. Recent market news has shown both sides of that tension. Semiconductor and AI-linked stocks have continued to attract investor attention, with memory demand and data center investment still central to the growth narrative. However, sharp pullbacks across chip stocks during June also showed how quickly crowded leadership areas can correct when expectations become stretched. The outlook for the coming months is positive, but not without risk. The major structural themes behind Nasdaq 100 leadership remain intact: AI deployment, semiconductor capacity, memory demand, cloud infrastructure, cybersecurity, and automation. However, after a strong run, expectations are high. Earnings reports, Federal Reserve messaging, bond yields, geopolitical shocks, and guidance from major technology companies could all trigger short-term volatility. For the strategy, the focus remains unchanged: maintain disciplined exposure, rotate toward relative strength, avoid discretionary headline chasing, control drawdowns, and allow compounding to work over time. The latest dashboard shows a strategy that continues to do what it was designed to do: compound over time, control drawdowns, rotate toward relative strength, and avoid emotional decision-making. The most important feature is not any single month, trade, or holding. It is the consistency of the process. Current or recent portfolio exposure includes ARM, MRVL, MU, AMD, and WDC. These holdings are examples of current or recent exposure, not recommendations. Positions may change as the model updates. For readers who would like to explore the strategy, methodology, and supporting market analysis in more detail, additional content is available at Backseat Trader. For an audio-visual version of this update and previous posts, visit our Strategy Commentary archive. Past performance is not indicative of future results. This content is for information only and does not constitute investment advice. Investing involves risk, including possible loss of capital.